Welcome to the Financial Technology Report, a leading information source on financial technology companies and solutions. In this episode, we speak with Dan Beck, CEO and co-founder of 401GO, a fintech retirement platform built to simplify 401k setup and management for businesses of all sizes. 401GO leverages automation to reduce costs and administrative burdens, while ensuring support and education remains central to the participant experience. Dan founded 401GO after experiencing firsthand how limited and costly retirement options were for small businesses. Today, the platform makes it possible for companies to provide employees with an affordable and practical retirement benefit, reshaping how retirement planning is delivered in the workplace. I'm your host, RJ Lumba. We hope you enjoy the show. If you like the episode, click to follow. Dan, great to be with you. Thanks for taking the time.
Happy to be here. Thank you.
So I didn't realize that you are a founder of multiple companies that you have exited. I think it's really cool. It seems like you set up a kind of a holding company and then had three, maybe more different products. And then you eventually grew those products, commercialized them, and then sold those as different kind of businesses.
Exactly.
Would love to hear a little bit more about them. And it seems like this was like a prolific time in your life where you were just coming up with ideas.
It was. I think everybody has kind of maybe their main driver for why they become an entrepreneur or a business owner. For me, it was really the pursuit of and the passion, just general curiosity. I love to learn and felt that by doing is really the way that I learned best. And so, really my first career, if you will, was in video and film production. So I was a TV producer, and, in doing that, I was exposed to a lot of different, aspects of business. And I learned, a lot about the inner workings of companies and how to do marketing, things like that, power of persuasion. And from there, that kind of dovetailed into, building a little bit of a kind of a marketing consultancy. And then at some point, I decided to, see if I could pivot from trading time for money, essentially just, my services into something that was, easier to grow in a way, or, kind of I could break away from that, my time as a commitment factor to what my compensation could be. And so naturally that was consumer products. And so I experimented with consumer products. And when I look at the different businesses that I was involved in, it was exploratory. This was kind of in the early days of like eBay and Amazon. And I was very successful in building a number of kind of e-commerce brands. But then from there, also wanted to learn more about just general wholesale distribution. And I had a few products that were sold in, big box retailers. I did a Kickstarter campaign because I thought that would be, a lot of fun and kind of an interesting endeavor, and had some success there. And some brands that were direct to consumer. So, for me, it was really just a way of exploring the world of business and consumer products, and I really enjoyed it. And the fun thing is my brother, who's one of the co-founders at 401GO and our CTO, I was able to do most of these businesses with him. I kind of started a little bit earlier, and so a few of the businesses I had were wholly mine. But then once he kind of came in as a business partner, every business that we built afterward, he was involved in, and it's been a lot of fun. Like, I've really enjoyed that entrepreneurial journey that I've been able to take.
What was the first product you came up with?
Honestly, it started as a mouse pad. So having been in kind of the creative field, I knew how important it is to have like keyboard shortcuts for like Final Cut Pro and these different, creative software that people would use. And then I would sell those on eBay. And I kind of got to the point where I started exploring other designs. And one of them was I've got like an engineering mind. I like to know how things come together. And so I thought exploded view diagrams of firearms were like super fascinating. And so I started putting those on mouse pads, and then people bought them and said, "Hey, this is cool. I want to use it to clean my gun, but it's too small." Because for somebody that's trying to, safely clean their firearm, they want to have a diagram of how it comes apart. And that's essentially what I created. And so I didn't really even own any firearms at the time. It's not that I was opposed to them or anything like that. It was just something that I thought was fascinating. And I kind of fell into that product, if you will. It was called TechMat, where we did these large exploded view diagrams that showed how to disassemble, very complicated rifles or simple handguns, whatever it may be. so that they could be safely cleaned while protecting the table they were on and keeping small parts from rolling away and that sort of thing. So that was really kind of the first outdoor sporting goods product that I got involved in. And then from there, I kind of ventured out into packs and bags, like high-end cutlery for like chef knives and hunting knives and point of use water filters, backpacks, sleeping bags, hammocks. So again, it was just kind of one thing led to another.
And was there something about kind of building out those products and business lines that is relevant to you as you build and scale 401go?
I think so, definitely. I'm always in pursuit of value, generally speaking. When I looked at a lot of the products that I launched, like the water filter product is, I felt that there were some really good point of use water filters. So I wanted a filter that I could use like in the high backcountry here in Utah, backpacking, but could that same filter also be used if there was a natural disaster and I needed to get water out of like a local river? And there just wasn't a product on the market that kind of fit that need. And so that's what I created was a modular point of use water filter system. And it was, kind of that same just general curiosity for things that surround me in my daily life and, the things that I'm doing and business that I discovered this opportunity for 401go, where we had tried to set up a 401k on a couple different occasions for a few of these prior companies. And in that process, I realized this is an absolute nightmare. It's going to take weeks to set this up. And I learned very early on, within a week or two of trying to get a 401k set up, that really it's reserved more for organizations that have like an HR person that's dedicated to that benefit because it's so complex and messy. And so naturally, my entrepreneurial mind kind of kicked in and I got curious and tried to figure out, does it have to be this complicated? Why is it this complicated? Why can't more small businesses offer this benefit? And the more my brother and I started to research this and dig in, the more we realized, yeah, there's a big opportunity here. It's extremely inefficient. And so for us, having come from a background where, in a lot of consumer products, we had one business where our gross margin was like 2%. So we had to have extensive amounts of automation to be profitable. And so we took a lot of what we learned there and applied it to this industry, that is in many ways very antiquated. They're built on these old legacy platforms. There's a lot of manual, human involved processes. And so we were able to automate a lot of that with kind of that consumer product mindset where it comes down to efficiency, reducing friction, delivering value, a lot of automation. And so I think that there is a lot of applicability, even if it's a very new industry for me.
Could you give us a sense for the scale of the company today?
Uh-huh. So we have about 100 employees currently. We're taking care of over 5,000 plans, 401k plans for businesses of all sizes. Our focus is definitely more on kind of like what the industry calls small micro market plans. Those are, small businesses. And the reason why is because that's the market segment that's been largely overlooked. And so we focused our time and energy there and we're able to grow at incredible scale. I mean, we'll sign on, this month over a couple hundred plans. And that's our typical growth is, several hundred plans a month. And that's accelerating. So we've had incredible year over year growth that's exceeded 200% year over year. And we see that continuing. One of the ways that we distribute is fairly unique. And so it's hard to go after a small business when like an average contract value is, let's say, $2,500. And so we distribute predominantly through partnerships. So we sell through like payroll partners and then also, benefit brokers, financial advisors that are doing 401ks or private wealth advisors that have clients that have small businesses. And so we distribute predominantly through those types of partners.
And when they're logging on to your platform, would they go through another more like umbrella platform, like a PEO, like where they would then see as an option a way to partner with you?
We do work with some PEOs. So we work with all different types of groups and really anyone that has a relationship with a small business owner. We want to distribute through those relationships and kind of leverage that capital, if you will. But we also do have businesses that come direct and they can sign up through our website. So really, we've built a very automated system where instead of it taking the average of 7 weeks to set up a plan, we can do that in 15 minutes all through our web interface. So when they are logging in, it is our platform. We do have the ability to embed because that's one thing that's unique is, some of our fintech competitors, they're approaching this kind of the same segment of the market that we are, but they started with a lot of legacy systems and software. For us, everything was purpose built from scratch. And so that gives us some very unique abilities to where a payroll provider can embed our product using just purely API calls and use their own interface within their own product. So we do have that capability, but most of our clients are logging into 401go and our app either through their mobile device. We have iOS and Android native apps, or they're doing it through the web interface to manage their 401k.
Is it truly the case where if you're a small or micro business in the US, you really don't have that many alternatives to provide this to your employees?
It's true. I mean, Paychex and ADP, they've had their 401k product for quite some time. But if you don't want to use one of those two vendors, or, even their product is kind of expensive compared to ours. And so, if you want an alternative, there are very few options out there, frankly. Most of the industry is focused on corporate America, large established plans north of 5 million in assets and, with several hundred employees. And so all those other businesses, that's really where we've kind of focused our time and attention.
And which fund groups or investment managers are fulfilling kind of the actual investment or placing of the assets?
That's a really good question. And one thing that I'm proud of is we're not beholden to a single fund family like Vanguard or Fidelity. We essentially use modern portfolio theory, efficient frontiers, and just identify on a quarterly basis, who are the top performers. And that's what makes it into our fund lineup. So we do have our own RIA, so we can be what's called a 338 fiduciary for plans. But the cool thing about our platform is we're very advisor centric. So over 70% of our plans have an advisor attached to them. Even if it comes through a payroll vendor, we'd like to attach an advisor. And these are not our advisors. They're third parties that we work with that sell our services. And also we provide them with referrals as well. And the goal is to have an advisor attached to every plan. And those advisors, if they want to, they can be that 338 fiduciary, meaning they can dictate their own fund lineup. And so that's what the industry calls open architecture, where, essentially that advisor can pick any sort of fund lineup and then offer that in the 401k. And so that is the nice thing about our platform is we have all the robust capabilities that you would expect from, some of these established record keeping platforms that have been around for some time. But we also have all the automation and technology, and we can get things up and running in a matter of minutes rather than days or weeks. So we do benefit both the industry that thrives on that complexity and wants all the options, but then also the newer distribution channel partners that need efficiency and scale and, speed when it comes to setting up 401ks.
The common thing that comes to folks' mind when you hear advisors is that there's fees attached.
Yes.
And there's friction into like why you would actually decide to go with
Yes.
an advisor and a plan. Tell us a little bit about how you kind of deal with that.
Yeah. You use two very key words that we hear time and time again, advisors. And some of our competitors kind of had this stance at the beginning. They've kind of backed down from it, but they said advisors do two things. They add fees and they add friction. And they may be right. And so now it comes down to, again, with kind of my value mindset and how I think about it, what value do they provide? And does that justify that cost? Because ultimately, it's generally us that deals with that friction. And so that's the value of owning our own technology and platforms. We're able to reduce that through just the way that we work with those advisors. The other thing, too, is because typically you would have a separate record keeper, third-party administrator. Some of the time you have separate 316 administrators. And so by the time you set up a typical 401k, you've got 4 or 5 companies involved in offering this, as well as an advisor. And so it is naturally going to be expensive. By being fully bundled, where we are that full vertically integrated platform, we're far more fee efficient. And so an advisor can charge their usual compensation, and the plan actually costs significantly less than, the incumbent solutions that they could offer that client. And so typically the way that our advisors will do smaller plans is they'll charge a flat setup fee, let's say $1,500, because normally they're compensated based off assets. In a startup plan or even a small plan that's been around for a couple of years, there's no assets. It's going to be years before that advisor can monetize it. And so in order to realign those incentives, we allowed them to charge kind of an upfront fee. And typically that's not feasible because you have a third-party administrator that's charging $1,500 just for the plan document. Because we've automated all of that, there's no need for us to charge that. So the advisor can provide that service and help really guide the client through. And we have very solid proof from just data of plans on our platform with an advisor versus those that don't. And the plans with an advisor, the service is generally better because you have somebody that's down the street that can come in and talk to your employees. We see a 15% higher participation rate, a 12% higher deferral rate. And so for that reason, I do believe that it does justify those fees and some of the friction that you inherit working with a human-based advisor, but we get better outcomes. And so that's why we're huge advocates of involving advisors in plans as much as we possibly can. And, we do have small business owners who are like, look, It's me and three others. Maybe I have an advisor that I want to use kind of on the side, not necessarily with the 401k. I don't need an advisor. We do come across that and we can support that. But whenever there's, a larger group of employees, we generally find you get better outcomes when you have both a high tech as well as a high touch approach. And that's an advisor that can walk in and talk with them.
And so when you say they can walk in and talk with them, are you mapping like where that small business is and then who's the nearest advisor?
Exactly. Yeah. So when someone comes through our platform, again, most of the time it's through either a payroll vendor that is referring client to us or setting it up through our platform. Or if it's an advisor that's bringing the client, we are obviously know there's an advisor attached to it. But those that don't have an advisor that's bringing the plan to our platform, we ask them in the process, do you have a financial advisor that you work with or you would like to work with? If so, they give us that information. We reach out, we establish that relationship. If they don't, then we will make recommendations with a product we call Go Connect, where we connect our network. We have about 1,600 advisors that are registered on the platform, and those that have meet certain requirements, meaning they have a number of plans with us, they've gone through some level of education and training related to 401k. Those become referral partners that when a client comes and says, I do want an advisor, we can make introductions to local based advisors that'll meet the needs that they've asked for.
Got it. I imagine retention is pretty high, customer retention, given it's like these are sticky assets.
They are. Yeah, naturally, with the industry, I want to say the average logo churn, so annually, it's around 12%. For us, it's below 6%. So we're retaining, over 94% of our customers on an annual basis. And so for any sort of benefit or really most, that's a very, very high number. Or high retention for a product of this nature, really just any product being sold into a small business, frankly.
Mm-hmm. You've brought in some outside capital. Can you tell us a little bit about your investors and kind of the value they bring to the table aside from the financial capital?
So we bootstrapped for the first couple of years, and that was really because we wanted to build our own platform and kind of take our time and not have the pressure of venture capital that's saying, where's the revenue? And so that allowed us to kind of take a more deliberate approach from the beginning. And then we did a seed round. It was in 2021. And then we raised a Series A round in spring of last year. And we're currently in the process of closing a Series B. So we've been very deliberate with the investors that we bring on. You find oftentimes in venture capital, there's kind of this growth at all cost mindset where it's about growing as fast as you possibly can. And then you just fix stuff that's broken as you're flying the plane. And given the type of product that we're offering, the amount of regulators that are involved, we did not feel that was the best approach. And so we were very selective about the types of investors that we found, ones that were willing to basically play a long game and think more about what's the best thing to do, keeping in mind like a 5-year goal and not necessarily taking shortcuts, in the name of chasing revenue. And so we've found investors that have been very helpful in that way. They've connected us to key hires, distribution partners. And so we've really been able to leverage those investors for more than just the capital that they provided. And the new investor, it's still too early to make that announcement now. The Series B stage, they certainly fit that mark as well. It's a big New York-based firm. They, excel in kind of this fintech space and are very connected. And so I'm looking forward to, kind of these next chapters with this new board member and investor that'll be part of the company.
Excellent. Last two questions. One is, can you tell us about a person who's had a profound influence on you?
It's my brother. That's one of the things that I cherish most about my career. And just frankly, it's a highlight of my life that I get to work alongside my brother. I learn a ton from him. He's, incredible when it comes to just ethics, and he's such a hard worker. And so he's been a very big part of my life from a career standpoint and just personally. He's an incredible partner and brother. So yeah, he's been great.
Awesome. What's his role in the company?
He's the CTO.
Yeah, it's a good kind of complementary skill sets there.
It is. Yeah, he knows his domain very well. And I know some of the time I'll have some ideas for product, but if push comes to shove, I just back down. And he's done an incredible job of getting us to where we are today. And I know he'll be able to kind of continue that, incredible growth that we've had and deliver on it. So I let him do his thing. He lets me do my thing. And we work very well together.
Awesome. Last question. Can you tell us about a charity cause or other endeavor that you're passionate about?
I love small business. Clearly I've been very entrepreneurial. And so I've always taken a liking to mentoring, If somebody reaches out to me on LinkedIn asking for some advice or something of that nature, I'm always willing to do that. And so, I found a lot of personal enjoyment out of being an entrepreneur and owning my own businesses. So whenever somebody expressed some interest in that, I jump in and try to help them in any way that I can. So I'm very passionate about that. The second one, and again, this is related to a product, the point of use water filter system. We donated a significant amount of money to charities at that point. And so I've always been a huge advocate of any sort of water charity. It's kind of unfortunate that the water that's going down the drain, in the showers, oftentimes cleaner than what most of the world has access to. And there's a lot of fatalities and a lot of, just heartache and economic impact for the developing nations that just simply don't have access to clean water. And so that's always been kind of a charity that I'm personally interested in, is investing in water charities.
Dan, thank you so much again for taking the time. It's been a pleasure.
Yeah, thank you.